Go. Okay, good. Good morning, everyone. And, beautiful morning and the San Obispo. It's always nice to visit this area and nice to meet you in person and online. My name is Kay Mardon. I'm with the SBA Fresno District Office. So SBA is a federal agency. We have 68 offices in the nation, and our office covers 15 counties in the Central Valley and the Central Coast. So anyhow, today we are going to talk about the access to capital. So hopefully you find the information that you're looking for or useful in your endeavor. Okay, so briefly, I want to introduce what services the SBA offer. So as a federal agency, we provide 4 main services. First of all, access to capital. So when people need money to start a business or expand their business, we provide loan programs so that you would have easier access to capital that you would need. So today's workshop is going to focusing on access to capital. The other service SBA also provides counseling and training. So mostly we do this kind of counseling and training through our resource partners, such as small business development centers, women's business centers, veterans business outreach centers, SCORE, right? So, but we also do our own training in terms of, providing information and some basic training to our partners, the public and our partners. The other service we are also involved in is government contracting opportunities we provide to small businesses. So we work with lots of federal agencies, Department of Defense, Homeland Security, Department of Transportation, all those entities, and help small businesses to become certified as a small or small disadvantaged or woman-owned small businesses, so that they could qualify for some of those contractor and the contracting opportunities for participating in federal government contracting opportunities. The last one I want to mention is that we provide disaster assistance. So when the natural disaster happens and people's home is burned down or business affected by, let's say, wildfire or flooding, that kind of situation, then we work with the FEMA to provide disaster assistance. Mostly, we provide loan assistance, disaster loan assistance. So during COVID time, we provide economic injury disaster loan because it was a national disaster. So we made direct loans to small business people and then public who are affected by those disasters. That's the only time SBA would make direct loans to businesses and public, because on the disaster situation, the private sector is not willing to participate, right? So these are the 4 main functions that SBA carries out. So today we are going to focusing on access to capital. So we are going to talk about the source of capital as one of the sources that capital is SBA loan programs, right? So I'm going to go over more in detail as to what are the specifics of SBA guaranteed loans. So first of all, we get lots of inquiries from the public asking about how much money they could borrow, right? This very natural question comes to your mind when you're thinking about starting a business or expanding your business. You may say, oh, I saved so much money, but I need this much, not enough. So what can I do here? So they want to know how much money they could borrow from the lender, then they could figure out. But the real world does not work like that, right? First of all, you need to know how much money you would need. So, and then you also know what are you going to do with the money and what kind of benefit that would give to you. Because especially for SBA loan program, given the fact that our program is a federal agency program, which uses taxpayers' money, so Congress often wants to know what kind of benefits the business and the public gets by using our program, right? So how much money do you need? Requires lots of careful planning and research on your part, meaning the borrower's part, right? You have to know how much money you would need. And if it's a startup, you need to estimate what is the one-time startup cost and what would be your ongoing expenses, such as utility, rent, your employee payroll. Whether you make any sale or not, you have to incur those expenses, right? So you have to know what's your one-time startup cost plus what is your ongoing expenses. We also strongly encourage, especially startup business people, to prepare month by month cash flow projection. Okay, it really helps you to see where you are short on cash, right? So that you can prepare yourself. The other thing is that lender wants to see your cash situation because their main concern is when they lend you money, they want to make sure that your business would generate enough income to service the debt. So you have to show by month cash flow projection that your business is going to generate enough income to service the debt, in addition to all the expenses covered. The other thing I also emphasize is that I want people to be more conservative, meaning that always give yourself some cushion because as a human being, we cannot predict everything in the future. Sometimes we forget add certain things. The chances are you always need more money than you estimated. So when you do a projection and when you go to the lender, you also want to add 25 to 30% more than you think you would need. Okay, and then the other thing is that nobody wants to lend you 100% money you would need, especially startups. If you are existing business have a record of making profits, then most of the chances that you are going to able to borrow most of the money that you would need. But if it's a startup, definitely the lender wants to see injection. Depending on the industry, from 10 to 30, even 50% of the money you would need that they want you to put down. Okay, so save the money if you are thinking of starting a business. Okay, what are you going to do with the money? So oftentimes people say, oh, well, just to lend me money, then I will pay you back. Why you want to know all those things? But the real world, lender wants to know every single penny where you're going to spend. And so you have to categorize, itemize it, right? So be specific and precise. So talk about you're buying real estate for your business, or you're building your own warehouse, buying equipment or machinery, working capital. You know, startup, you will have to buy inventory and those things upfront. So those things. FF means a furniture fixture. Then if you're a restaurant or something, you have to do leasehold improvement. Okay, let's say you started some business together with some partner. One partner wants to move on and wants to sell, you know, her portion of the business you want to buy. You could also indicate that. The other thing is that you could also refinance, you know, high interest paying debt, such as a credit card debt that you use for your business. You could refinance it. Okay, so as I said, you also want to, you know, tell us about what kind of benefit you could get by borrowing the, let's say, SBA loan. So could provide you seed money to start your business or expansion into new territory. Or, you know, you could buy some piece of equipment that help you to increase productivity. Thereby, you could increase your revenue and profit. And then oftentimes, you know, some supply offers you the volume discount. So by buying, you know, big volume, you could take advantage of discounts. And then also maybe by consolidating some high paying debt into one, you could achieve a better cash flow. So provide that kind of information to your lender when you apply for, let's say, SBA loan. Now let's go into more deeper into what is SBA guaranteed loans. Okay, so the topics I'm going to cover today is why you want to consider SBA loans, and then how the programs work, and what lenders and SBA is looking for in your application, which programs are out there that you could choose from, which lender you need to contact, and then what items you want to take with you when you go talk to the lender. Okay. So First of all, the SBA programs provide better terms and conditions compared to conventional loans. First of all, the biggest benefit, one of the is that longer maturity. So SBA loan intentionally has a longer to help you have a lower monthly payment. So oftentimes the biggest challenge for startup business and early phase of business is that having enough working capital until your business is established and they generate enough income. You always have to struggle with enough working capital to carry on the business until break-even point and start making profit, right? So our program has longer maturity, thereby lower your monthly payment, which will leave you with more money to run your business. And also they reduce your chance of have to go back to the lender and ask for additional money, right? The other benefit of SBA program is that we have interest ceiling where lenders are allowed to charge. Under that ceiling, lender could charge any interest rate they would like to charge you. So we have a maximum interest rate, which protects you from being charged a very high interest rate. The other benefit of our program is that all available collateral. It means two ways. One, if you have asset to secure the loan 100%, depending on loan size, some loans could be unsecured or undersecured. However, if you reach a certain loan size, then let's also see how the collateral to secure the loan, right? So if you have assets to give a full collateral coverage, then you have to pledge assets to do so. But let's say you have given everything you have, but you're still short on those collateral, there's no hard collateral to provide anymore, then you should not be denied because of that. Just because the lack of collateral should not deny your loan application. The repayment ability is very important. If your business doesn't show repayment ability, no matter how strong collateral you provide, you won't be able to borrow money. However, if you show good repayment ability, but collateral is a little bit short, then you should be able to get an SBA loan. Smaller equity injection requirements. Oftentimes, let's say conventional bank requires 30% down, typically. Then let's say you can only come up with the 15%, 20% equity. You may be able to get an SBA loan given all other conditions are favorable, okay? So that's another benefit. The SBA loan is fully amortized. So you never worry about having balloon payment at the end of the loan, those things, because oftentimes we have seen when during financial crisis, people get the loan with the balloon payment feature, and when the economic condition gets worse, then they have a trouble, and especially interest rate going high, they're trouble refinancing those debt. But with the SBA loan, you don't have to worry about it because whenever lender adjusts the rate, they are required to re-amortize whatever the outstanding balance. So by the maturity day, you are going to pay off the full amount. The other thing, the SBA, the benefit of it is that nowadays you get a very quick response time. Okay, so everything is electronic submission nowadays. So lenders submit the loans using different methods they choose, and then they get SBA response. Let's say it's a delegated authority, they get it like in a couple of days. Even if it's like a regular standard, they submit to the SBA for review. It usually takes 1 or 2 weeks. Okay. The other benefit is that most of the conventional loans, when you want to ask a lender to subordinate their lien on your, let's say, your registered as collateral, because you want to take advantage of lower rate, then they usually charge you money. But on the SBA program, we don't do that. So free servicing actions. And then not only SBA borrowers, but our service is the counseling and training is open to everyone, okay, through the SCORE, Small Business Development Center, Women's Business Center. They are all our resource partners. They get some little amount of grant funding from the government, and they raise additional money and they provide free counseling and training. So take advantage of those services. The biggest benefit of the SBA program is that it gives you higher probability of getting a loan. So how the SBA guarantee works is that, let's say you borrowed the $200,000 loan, the SBA loan versus the conventional loan. So from lender's standpoint, if they make conventional loan to you, let's say you paid back about $50,000 and business didn't work out, so you have to sell the assets that you pledged as collateral, because that's what lender will do, go out and liquidate those things. And they collect, let's say, $50,000. Let's say there's 100,000, they cannot collect from you anymore because business is no longer in business and there's no repayment coming from. Under that scenario, on the conventional loan, lender has to absorb the 100% of loss, in this case, $100,000. Same scenario, if lender use the SBA program, their risk is going to be reduced to 25 or 15% of the total loss. So same scenario, but usually SBA provides a 75% guarantee to the lender for loan size of 150,000 above and 85% below that, right? What that means is that, let's say 75% guarantee. So we use the same example here. So lender did the same thing, and there's $100,000 they cannot collect anymore. So SBA provides 75% guarantee. What that means is that SBA has to give the lender 75% of loss they cannot collect from the borrower anymore. So in this case, they have to give to $75,000 to the lender. So from lender's standpoint, their loss would be only $25,000 compared to $100,000 that they use the conventional loan. So what our guarantee does is that we really encourage our lending partners to be a little bit more flexible and then extend the loans to those people they feel that is riskier. So they only have to take 25% risk. And then, by doing so, they also make money by collecting the processing fee and selling the loans in the secondary market at a premium. So it really gives lenders a high incentives for extending credit to those businesses that they would otherwise decline, right? So I also encourage our potential borrowers, go to the lender that has SBA program instead of going to the lender that doesn't have, okay? The scenario is that you go to bank A, let's say lender A, who doesn't have an SBA program. You submit the loan application. They meet their criteria, then they are going to decline it, right? You go to lender B, because lenders use a similar criteria to determine whether this business is creditworthy or not. Chances are you're going to get declined again. However, let's say lender B has SBA program. Same scenario, but lender B would have another option, SBA option. So let's say your business shows a good repayment ability, it's a startup, or you have lots of experience in the industry, and then your projection is very reasonable, so lender wants to make a loan to you. But it's a startup, quite risky, so lender is quite reluctant using their own program. Under that circumstances, they know if they use SBA program, they only have to take, let's say, 25 or 15% risk, and then able to make a loan. And in case you cannot pay back the full amount, they could get a 75 to 85% loss they could collect from the government. So they really able to make a loan to you. So as a borrower, by going to the lender that has SBA program, you are basically increasing your chance of getting a loan. Okay, so the nice thing about the news is that most of the lenders in town, they are SBA lenders, starting with some big national bank, such as Wells Fargo, Chase, Bank of America, US Bank. They all have SBA program, okay? The other thing is that most two community banks, regional banks, they have a SBA program. It's much easier to count who are not SBA lenders, right? So we always ask our customers when they call us, who should I go to? I advise that start with a lender you have already relationship with. Chances are they have SBA program. So if they don't have it, then you have easy time to find another lender. Okay, so my advice would be try to find a lender that has SBA program And if it happens to be your lender has that SBA program, start with that. If they don't want to do it or they don't have it, then shop around and then you could find one. So, okay, so how the programs work is that, as I mentioned, SBA only make direct loans under disaster situation. All other circumstances, we don't make loans directly. Okay, so you need to submit your loan application to an honorable SBA lender of your choice. Okay, then lender review your application, and then they decide whether they want to make a loan to you using SBA program or not. Okay, if they decide to do that, then they submit the application to the SBA, and then we review depending on the loan program, the loan method the lender chooses. Sometimes the SBA get involved really deeply, and we review it. Then they use the delegate authority, then they just to issue the SBA loan number, right? And then you make a payment to the lender, not to the SBA. Okay, so there's no direct interaction between you and the SBA. You just work with the lender that has SBA program, get the loan from them, you make a payment to that. Okay. Now, what lenders are looking for in your application? As I mentioned, repayment ability is the most important factor. Okay, this is not a grant program, loan program, meaning that you have to pay back. So from lender standpoint, the most important factor they are looking for in your application is whether your business would show repayment ability. Okay, that's why when you do month-to-month cash flow projection, it is very important for you to do enough research and then provide reasonable projections for your month-by-month cash flow projection, and then provide assumptions you have made to give credibility to your projection, right? Otherwise, lender is going to adjust it, and then they are going to make a determination based upon that information. So sufficient cash flow to meet business and your personal needs, right? Reasonable injection amount. The more money you bring to the table, to get the loan, right? Because you reduce lenders' exposure, risk exposure, right? Credit worthiness. They are going to look at your credit history, your habit of paying back the debt, right? The character. If you are going to in like a probation or probate currently, in the past they just changed the law. So if you had in the past, then it could be okay. But if you're currently serving those things, you won't be eligible. So you need to discuss those things with your lender. Your experience and training and expertise in the area you want to get into, right? Good collateral coverage. As I mentioned, we require on the SBA program, you pledge all the assets you have to secure the loan. But in case you've given everything you have, but you don't have enough to provide additional things, then could be okay. Because based on also loan amount, like for example, 50,000 or under, SBA would not require, let's say, security, like unsecured, right? Could be unsecured. So you discuss those things with lenders. Now, what SBA is looking for? So that's the lender's first test. So you pass the lender's test, then they, let's say, report to SBA. What we are looking for is that because it's a government program, we're also looking for additionally, in addition to the repayment ability, we also make sure that you are for-profit organization. So under disaster loan situation, doesn't matter whether you're for-profit, non-profit, everybody is eligible, right? But for regular SBA lending program, has to be for-profit organization. The other thing is it has to be small business by SBA criteria. You don't have to worry about whether your business is small or not, because 99% of the time you would be considered a small business. For example, one of the size standard we apply is that we are talking about 20 million, okay, the tangible business asset, and then 6.5 million 2-year average net profit from your business. So most of the companies we are dealing with, borrowers we are dealing with, we hardly see business that exceed that kind of net worth and net income. And if you are in that size, you would have no problem finding a lender who wants to lend you money. Okay, so our program is for those businesses who would have some difficult time getting the access to the to capital. So if you are in a certain size and lenders are chasing your business, you don't need the SBA loan guarantee to get the money. Has to be U.S. citizen who are legally in this country, right? Given that our program is a federal program that is supported by taxpayer money, we want to make sure that person who receives the benefit from our program is U.S. citizen who are legally in this country. Good character, I just mentioned. So if you're personally serving jail time or you commit some crime, involving financial institution that may not be eligible to getting the SBA loan. No loss to the federal government. This is important because many people do not understand or underestimate, especially people or business who got the PPP loans or COVID economic injury to death loans. Many people ignore the notice from the SBA and do not submit the paperwork to get the forgiveness on the PPP program. What they don't realize is that if you ignore those things, it becomes delinquent. Then they send your loan to the Treasury. Okay, then Treasury has offset program, where they are going to garnish anything coming from the federal government in the form of a Social Security benefit or your tax refund, anything, or future assistance from the federal government. You won't be eligible to receive any assistance from the federal government going forward if you have that kind of issues, okay? So always address it. If you got the PPP loan, you have not submitted forgiveness, the window is open again. They allow everyone, regardless size of loan you have received, that you could submit forgiveness request and that could be forgiven. So do not ignore. And if you got the EIDL loan, now EIDL is not a PPP loan like a grant funding. It is loan program, so you must pay back. In case you have trouble paying back the loan amount, you have to contact the SBA and ask for hardship accommodation plan. So your payment could be as low as $25 for a certain period of time to help you go over those obstacles for your business to overcome. So the point I'm making here is that please do not ignore that those loans, notification from the SBA on those things, take care of it, okay? Because once you cause any loss to federal government, that will exclude you from receiving any further assistance from the federal government no matter what. Okay, which programs to choose from? So SBA has 3 main programs we are involved in making. 7A program, 504 program, microloan program, okay? So 7A program is most of the times you hear about, banks makes it, credit union makes it, that's 7A, because that's small business section 7A. So that's how we call them 7A program, right? There's another program called the 504 program that's specifically designed for the real estate transaction, right? For business that requires real estate. So you buying the existing building, or they want to build the old building somewhere that you could utilize 504 program to do so. Then we have a microloan program. Those people who are looking for small dollar amount loans, like 50,000 less, they really have a hard time finding a lender who spend time and making a loan to them, right? So we have a microloan program that targeting underserved communities, like a low to moderate income communities. So I will go over briefly what each programs are. So 7A program, you could utilize the fund for any business purposes, starting with working capital. So you can use the money to buy the building for your business, or constructing a building for your business, and buying the equipment, or doing leasehold improvement. Okay, and also you could use the fund to buy out your partner or buying the business from somebody else. Okay. The other thing I also want to point out to you is that you can do also refinancing of existing debt. You are paying higher rate right now. Okay, so those are some of the frequent uses of 7A program. As I mentioned, our program has longer maturity. As you can see, line of credit, you could get all the way up to 10 years, okay? Working capital, Okay, that's real estate could be up to 25 years. Conventional loans usually 10 or 7 or 15 years, right? Compared to conventional loan terms, we give you 25 years. Equipment, 10 years usually, but could be longer if IRS determines that the equipment has, let's say, 15 years, then you could get 15 years. Okay, so briefly, I want to go over some different types of 7A program, because when you go talk to lender may mention these programs, so I just want to share with you what they are. So we have a standard 7A program. Standard 7A program, we differentiate like a $500,000 or less. We call them 7A small loans, and it's much more simplified loan processing. So our lending partners would spend less time processing those loans. And then we have loans over $500,000 to all the way to $5 million, okay? SBA Express, these programs utilize a lot of people who need lines of credit, okay? It's $500,000 or less, and then lender use their own forms as procedures. So make it even easier for the lender and then help them to give better turnaround time, okay? So SBA Express. Then we have 3 loan programs for exporters, because we want to encourage our companies to export. So SBA has Export Express program, which provides a small $500,000 or less lines of credit and term loans. And then we have international trade loan, which is more fixed asset financing, term loans, okay, up to $5 billion. The other program is the Export Working Capital program, up to $5 billion. This is the somewhat bigger sized transaction. So you get the, let's say, contract from some country out there that you need about the $3 or $4 million upfront to do the work. You could utilize Export Working Capital program based upon that contract and then pay back when you get the money. We have another program called the Veterans Advantage Program for veterans. Okay, so I'm going to tell you briefly later slide about what those programs are. Community Advantage Program. So one of the things that the SBA realized was that, especially pandemic time and those times, small businesses have a difficult time borrowing the money, especially loan size gets smaller and much difficult. So we created a Community Advantage Program, which loan size could be up to $350,000. So we have a microloan program that focuses on $50,000 or less, right? What if people looking for $75,000 or $100,000 loan? They still have difficulty getting a loan from national bank or banks, because those banks want to make a profit. So if you have a limited number of your resources, staff member, you want your staff to spend time processing $1 million deal instead of $100,000 deal, right? So those companies looking for smaller dollar amount having difficult time. So we created Community Advantage Program, which open to non-bank lenders. So mostly the micro lenders would also become the Community Advantage lender. So they would have a micro loan, smaller, really small one, and then the program, companies that are looking for a little bit more money, up to $350,000. So that's the program we have. So on the standard program, SBA loan size could be all the way up to $5 million. Express product, because we are giving so much of letter to our lending partners, $500,000, okay? Veterans Advantage could be all the way up to $5 million on the standard program. If they want to use SBA Express, is $500,000. I'm going to talk about under which circumstances you want to use SBA Express. Community Advantage, $350,000. So you start small, 50,000 borrowed, and then you need 100,000, you use that, and then you're getting bigger and bigger, then more than 350,000, then that's when you go to regular 7A lender and then apply for different loan programs. Microloan, 50,000 is maximum. Interest rate, okay? So base rate is mostly prime rate. Right now, prime is high, so I know it's quite high rate right now. But if loan amount is 50,000 less, prime plus 6.5. Anything more than 50,000, $250,000, prime plus 6. Okay, more than $250,000 up to 350,000, 4.5 to prime. And then anything above 350,000 up to 5 million is going to be 3% plus prime. So you might say, like, how come it's a much higher spread than as loan size gets smaller? Well, this marketplace, right? In order to induce lenders to make loans and have them to process smaller dollar amount, we should offer more incentives for spending time processing smaller dollar amount, thereby giving them a little bit higher profit margin. So that's what it is. Okay, one thing I want to mention to you is that nothing in the world is free, right? There's no free lunch, right? Again, our program is run by the taxpayers' money, but as each year, Congress gives a certain amount of money for 7A lending, 504 lending, and those things. So what we do is like we collect guarantee fee from people who utilize the program and replenish those money that we give out, like a guarantee purchase from the lenders the loan didn't perform, right? So there is always a guarantee fee involved. The nice thing is that the business doesn't have to come up with the cash to make a payments and guarantee fee upfront. Could be added to loan amount, being amortized over 10 years, 25 years, whatever. So you don't have to come up with a lump sum upfront. And then the guarantee fee is determined by gross loan amount, including both SBA guaranteed portion, and then there's the unguaranteed portion together. Then we have a tier system, how much they are going to charge. But the actual fee the customer is going to pay is going to be based upon only SBA guaranteed portion. Okay, so for this fiscal year, which started October 1st, 2023, and then all the way September 30th this year, so the federal government fiscal year starts October 1st through the September 30th, any loans of 1 million or less, there's no guarantee fee. Because given after COVID, government wants to make sure that people have access to the money and increase our lending partner continue to offer the credit available, and then also lessen the burden on the borrower. The federal government waived guarantee fee all the way up to 1 million. Okay, so if you are thinking of borrowing money, you may want to apply for before September 30th. Okay, and then regardless loan amount, if maturity of the loan is 12 months or less, then only 0.25%. Okay, and the guaranteed portion. Any loan between 1 million and 2 million, more than 1 year maturity, then 1.45, and the loans of 2 million above, then 3.5. So lender has all the calculations, so you don't have to memorize these things, but just for your information purposes. Okay, I just mentioned that the 1 million less this year, if you apply and get approved before September 30th, then there is no guarantee fee. For veterans, okay, it is important if you are a veteran or your spouse of veteran to mention to your lender that you are the veteran or spouse of veteran. And then let's say you are going to borrow less than $500,000, you may want to ask them you want to use the SBA Express instead of a regular standard program to make a loan to you. There's a difference. For this year, because guarantee fee is waived for everybody, doesn't make any difference. However, other years, there's a guarantee fee, then saying to the lender that you want SBA Express, you are not going to charge the guarantee fee. If you don't say that and you use the regular program, you are going to pay the guarantee fee. Okay, so if you're a veteran or spouse veteran, always mention to your lender that you are veteran, you want to utilize SBA Express if you're looking for $500,000 or less. Okay, if it goes above $500,000, the benefit goes away. Of course, the maximum size on the SBA Express is only $500,000. Okay, 504 program. As I mentioned, this program is specifically designed to help business to have their own real estate premises to run their business. So when you rent some lease, some building, you pay rent the money goes to landlord. So the SBA came up with this program to help you have your own premises while you're doing business. You also build your equity. And instead of giving that equity to someone else, you're going to accumulate for yourself, right? So that's this program is created for that in mind. So you could buy the existing building while you're constructing a new building. So let's say you have land you purchased some years ago, you want to construct your warehouse there, you could utilize this program to do so. And then it also allows to do some daily financing. So let's say you have a business, the building over here, you have a first mortgage already when you build that. You use the conventional loan and you have a mortgage there. But now you want the expansion of that facility because your business is growing. Under that circumstances, you could refinance the existing first deed and then combine it together with a new 504 program. That way you only have one loan, the service that you have to do, okay? If you need some working capital, nowadays they allow this program to allow you to add some working capital portion, but if most of the times working capital, you have to apply for 7(a) program to do so, okay? So 504 is mostly real estate transaction, and the 7(a) could be real estate and all other business purposes. So if you have real estate transaction, you may want to do comparison between 7(a) and 504 program, and then pick whatever fit your need better. So program, under 7(a) program, you just pick a lender and the lender takes care of everything. 504 program, you go to either lender or there is a company called the Certified Development Company, CDC, okay? It's not the Center for Disease Control, okay? It's a Certified Development Company, which is created by the SBA to handle 504 program, right? So under 7(a) program, lender does all the loan servicing, loan underwriting, everything. On the 504 program, there's a split. The lender, the certified lender who doesn't get any guarantee from the government, they provide about 50% or more of project cost. And then CDC, then SBA together, then we provide 30, 35, or 40% financing. Now, how they determine that, how much the portion of your project that's going to be participate, determined by your equity injection requirements. So one of the big difference between 7(a) and 504 is under 7(a), let's say real estate transaction. The lender may require 10% down, 15% down, 20% down. SBA does not specify how much equity you have to put down. Whereas a 504 program, there's a specific amount you have to bring in. So if your business is new, meaning they're less than 2 years old, and the building you're building is, let's say, gas stations, a special purpose, like a movie theater, hotel, then you have to bring in 20%, right? And then your business is more than 2 years old, building you're buying is a general purpose. You can change the use of building very easily, only 10% down. Either or situation, 15%. So based upon how much you have to bring in, then the remainder is financed by the SBA. So if you have to bring in 20% down, then SBA portion would be 30%, 15%, 35, 10%, then SBA portion would be 40%. So that's how the difference between 7(a) and 504, okay? The other biggest the difference is that the 7(a) program, usually you are going to get a variable rate, meaning the lender will give you money based upon prime plus their spread, their profit margin. So prime goes up, your rate goes up. Prime goes down, your rate goes down. So your payment might be better. Under this program, the lender portion could be that like that because we have no control over lender determines. CDC SB portion, you get the fixed rate of the loan. Okay, so right now interest rates are high, so it's not that attractive. However, like 3 or 4 years ago, rate is really low. People could lock in for 3% for 20, 25 years for SBA portion. So it was very attractive option. So when you are thinking about the real estate transaction, I encourage you to do some comparisons to 7(a) and 504. And then because there's some prepayment penalty involved and those things. So you pick the right program for your business need. Okay, so oftentimes people ask, okay, which lender can I contact to apply for SBA loan? As I mentioned, most of the national banks and the regional and community banks, they all provide SBA lending. So you just start as a lender that you already have a relationship, and then you have each time to find another one in case they don't. Okay. And then there's one program I want to mention is the matching program the SBA provides. So it's like eHarmony type of like, we have matching programs. So you go to SBA website and then provide your need, your little bit of a brief description of your need, how much, what kind of business you are in, and the kind of information. And then this program is open to our lending partners also. So the lender goes in, they also provide, information such as, oh, I'm the lender. I'm interested in any deals coming out of SLO County, anything above $250,000 up, let's say. Then let's say you are looking for $300,000 loan. Then that information, your information goes out to all those lenders who signed up for that criteria. And then you are going to receive a notification from the system saying that, oh, such and certain lender is interested in your deal. Then you could click on it and then look at it. So you pick which lender you want to work with. So this is great program in case you are shopping for, you are not happy with existing lender and you want to try a new lender, or you want to shop around and who could give you the best rate and terms, you could try this lender match. Okay, what items you want to take with you when you go talk to lender? You never want to go to the lender and say, how much money can I borrow? That's automatic decline, okay? So please don't do that. Before you go to the lender, you gotta do your own homework. So if it's a startup business, you must have your business plan because you understand your business, nobody else, right? So you gotta prepare a business plan. If you need help doing that, all our resource partners, women's business centers, small business development centers, SCORE, if you are veterans of business outreach centers, they all have programs and counselors who could help you with the business plan. They are not going to write it for you. The idea and all the information has to come from you, but they can help you how you could write it. Cash flow projection, I mentioned to you, the most important factor both lender and SBA focusing on is the repayment ability of the business. So it's very important that you spend enough time, do research, and make a reasonable assumption, provide that information to the lender, and then do the cash flow projection every month by month, okay? And then financials. So if you have existing business, they want to see interim financials plus about 3 years of financial statements, okay? If you don't have that and it's a startup, usually they want to see your personal financial statement, listing all your assets and liabilities, and the tax returns, both the personal and the business. So of course, if it's a startup, you don't have a business, yet you still have to provide your personal tax returns for at least 2 to 3 years for the SBA program. Resume of the owner and manager. So again, the SBA loan program highly focuses on the person who's going to run the business, the owner and the key managers' experience and the training. So provide the resume of those key personnel. Now, I want to talk about a little bit about the microloan program, okay? So this is a small dollar, 50,000 or less. And so people looking for a smaller dollar amount. And the unique feature about this program is that it comes with a technical assistance. So under other SBA program, getting technical assistance is not required, right? And the lenders are not required to provide any technical assistance. However, under this program, lender is responsible for giving you some technical assistance in terms of how to do marketing for your business, how to manage your HR, all those things that business people would need to know, right? Because this segment of the customers oftentimes is not that conversant with like doing that kind of task, doing the marketing, website design, hiring people and all those things. So this program requires lenders to provide that assistance. I mentioned about on the 7A SBA program, the business has to, the 504, same thing, has to be for profit to be eligible, right? Under this program, if it's a child care center, even if it's a nonprofit, it is eligible. Okay, that's the exception for this program. So not only for profit, but if it's a nonprofit, child care center would be eligible under this program. And then on the 7A program, it's nationwide. So if a lender is a 7A lender, they could make SBA loan anywhere in the United States. If it's a 504 lender, then mostly they have their state. So California state or Texas, they are given certain state to do that. Under this program, it comes to specific territory. So each area is assigned micro lender that do this kind of financing, okay? And again, requires US citizen or legal resident, okay? Like a 7A program. So up to 50,000, there's no minimum amount required. Maturity under this program is 7 years, okay? Most of it is like working capital, right? And no revolving line of credit. So if you're looking for a line of credit, probably you won't be able to utilize this program. It's term loan. Interest rate is quite different than 7A program. So unlike most 7A loan where it's a variable rate, you are going to get fixed rate. Based upon loan amount, if microloan is 10,000 or less, the lender could add up to 8.5% to cost of fund that they get from the SBA. So under this program, let's say, first of all, on the 7A program, lenders use their own fund to make a loan, and they take also risk, 25 or 15% of risk, or up to 50% on the express program, their own risk, use their own money. Under this microloan program, SBA becomes a lender, meaning that SBA lends money to these micro lenders who in turn then re-lend the money to the public who needs the money, right? So that's the cost of fund, meaning that the fund, the interest rate they pay to the SBA when they get the money. So usually SBA use like a 10-year treasury rate as a basis for the cost of fund. So it's much lower than, let's say, prime, then plus the profit margin, right? And then if loan amount is more than 10,000, then lender could add all the way up to 7.75. Again, this is the maximum allowed. So some micro lenders are willing to charge only 5% above cost of fund or 6%. So you want to talk to the lender and see whether you could get better rate, okay? Use of proceed. You can use any business purposes under this program except real estate. Of course, $50,000 loan size, you cannot do much for real estate things, but it's also technically it is restricted. You cannot use it. Collateral underwriting, those things are lender decides, right? So SBA becomes a lender, give the money to the lender, and the lender is supposed to administer. Okay, so technical assistance is free, okay? You don't pay anything, all those assistance you're supposed to get. And the lender is required to provide at least 50% of their technical assistance once you get the money, right? Because we want to make sure who got the microloan get the enough assistance so that they keep their business going and be successful. Okay, in terms of microloan lender, I told you about comes with the territory. So let's say SLO County. You may want to get in touch with the California Coastal Rural Development Company. They have headquarters in Salinas, but they cover the central coast regions like SLO County, Monterey, Santa Cruz, Santa Barbara. That's their territory. Okay, so if you are in this area, you want to borrow 50,000 less microloan, then you may want to call the Coastal. And there's another entity called the CDC, Small Business Finance. This is one of the very handful of companies that are given authority to do this microloan nationwide. So CDC Small Business Finance is another entity you could get in touch with, right? And so in terms of California, they could cover all the counties. Okay, so if you are located here, you have two lenders to get in touch with, CalCoastal or CDC Small Business Finance. Okay, so that's for, in terms of SBA lending program, that's what I have. What I like to do is I want to share with you some new information that from the SBA. So Invest in America. So just for your information purposes. So we just got some information from the headquarters, so we don't have a really in-depth understanding of it. But I want to share with you that information. So if you are in the industry that could benefit from these programs, you may, do so. So Madison, is the continuously or?
What was that?
Can you bring the Invest in America slide?
Yeah, if you just.
Oh, just go? Okay, good, thank you.
There you go.
Yeah, good, thank you.
No problem.
All right, so so Congress passed several acts to deal with the after the COVID, right? So they are going to provide some investment opportunities to critical sectors of the economy. So they are mainly focusing on infrastructure, clean energy, semiconductors, and biotechnology, okay, the manufacturers. So the detailed information is SBA.gov II, so Invest in America HUB. So IIA HUB, by visiting that site, when you click on that link, it'll take you there. Then you can take a more detailed look on what the program is about, okay? So they basically give brief information as to how many companies could qualify, like a small manufacturer, for example, that they identify about more than 230,000 small manufacturers out there could benefit from it. So take a look at it, and up to nearly $25,000 energy efficiency tax credit rebates for household. Okay, so there's some program for individual household, and estimate $50 billion in government contracting opportunities for small business. So all of these things, if you have a business that could be benefiting from this program, you may want to actively looking for it. So those the following sectors are really, they are focusing on manufacturing, okay? The other thing is the home repair and the construction, and then government contracting, subcontracting opportunities. Manufacturing, so industrial assessment centers program for small manufacturers. So you could utilize this program to do those assessments. I think that cost is covered by this program. So if you could benefit from it, please do so. And then home repair construction. Okay, we included the California-wide, which site you could go in and then take a look at it. Government contracting, subcontracting. So as you can see at the bottom of it, Department of Transportation procurement forecast. So give you some idea as to what kind of projects Department of Transportation plans to do. So you could prepare to bid on those work. High-speed internet contracting opportunities. So they again try to provide more services to rural communities. And if your company happens to be provide that kind of services, you may want to read this program and then see whether you could participate. Okay, so again, our website will give you information on program overview, how to do that, and how to participate, available opportunities, and all those things. So as I mentioned, I'm sharing this slide just for information purposes in case you are in those sectors that could benefit. Okay. So that is my presentation today. And Madison, is there any questions that I could answer or?